While we've recorded our adjusting entries for Merriweather car detailing, we still need to transfer the amounts recorded in those entries to the necessary T accounts to figure out what the adjusted balance of those T accounts is so we can prepare our adjusted trial balance. In this example, I've compiled all of the T's for the accounts that were affected by our adjusting entry, so let's go and figure out our new adjusted balance for all of these accounts. We're going to start with accounts receivable. Well, we made an adjustment to accounts receivable on March 31st. How much did we adjust this account for? Well, if I hit equals and I go back to my adjustments, I see that right here, if I can find it, there we go, we had a debit to AR for $2,500 in this adjustment for accrued revenues earned. So I'm going to click that 2,500. I'm going to bring it on over, and we know now that our balance has increased. Math tells me to 6,000, which we would find by adding together the sum of all of our debits and subtracting the sum of all of our credits. And it's debits minus credits because accounts receivable is an asset account which increases on the debit side. There's our $6,000 balance. We have supplies in here. Well, we probably made an adjustment to this on 3/31. In fact, I know that we did. And we credited it in our adjustment because we reduced the value of supplies to account for the amount of supplies that we expended during the period. Well, how much did we reduce supplies by? I'm going to hit equals. I'm going to go back to my adjusting entries and find our adjustment for supplies, which is right here. We credited supplies by $2,900 in that adjustment. We did so to reduce it from its $8,000 book balance down to the $5,100 we had in our physical count. So I'm going to transfer that $2,900 credit over to my T's. And in Excel, I can cheat right now and copy that formula over that I had before, debits minus credits, by right-clicking, hitting copy, going to the cell that I want to put it in, and right-clicking again. And I got this little paste option, F of X, for formulas. And here, now our debits minus our credits equals $5,100, which was indeed our physical count of supplies. Moving on, we got prepaid insurance. Some of it expired. We reduced our prepaid insurance account in our adjustments. Did so again one more time on 3/31. How much did we credit to prepaid insurance for in our adjusting entries? Let's go find our prepaid insurance expiration entry. It's right here. We credited prepaid insurance for $1,200. Same thing that I did before. Let me go and copy down our formula. And the balance of our prepaid insurance T account is now $3,600. For accumulated depreciation, we depreciated our cleaning equipment during the period, and like you always do when you increase the value of accumulated depreciation, we credited it. So I'm going to go to the cell that I want to transfer the number over, and I am going to go back to my adjustments. I'm going to find the adjustment for depreciation, which is right here. We credited accumulated depreciation of equipment for $300. So let me transfer that $300 credit over to my T's. Accumulated depreciation, like all contra asset accounts, has a normal credit balance. So we can find the balance of its T account by taking the sum of all of the credits and subtracting the sum of all of the debits. And our balance now of accumulated depreciation is $300, which makes sense because it was $0 and we just added $300 to it. Allowance for bad debt. We adjusted that balance in our adjustments. In fact, if I scroll down, we increased it by $70 by crediting our allowance for bad debt account. So I'm going to go and hit equals on the credit side over here in the next available line that we have. Go back to my adjustments and bring that $70 credit over in the journal entry that we recorded on March 31st. To bring our target balance up. And now our balance was at that $180. That's exactly what we wanted. Salaries and wages payable is our next one. We put some salaries and wages, which we owed, on our books, and we increased our liability to our employees And like all liability accounts, because it ends in payable, it increased on the credit side. So let's go find the credit that we made to salaries and wages payable. And he's right up here. We credited salaries and wages payable for $660 on March 31st. Since that is a credit balance account, typically, like all liabilities, we can go and we can copy our formula for our credit balance account, which we just had over here. Copy and paste using the formula paste function. We have a $660 balance to that account now. For interest payable, we made an adjustment to recognize the fact that we owed interest now that it accumulated on our outstanding note to our lender. We credited interest payable in that account. How much did we credit it for? Right here, we credited it for $100. Let me transfer that $100 credit from my journal entry over to my T. And on 3/31, we have $100 credit going in. I'm going to copy and paste our credit balance formula one more time. The balance of that account is now $100. For unearned revenue, we owed $4,200, but we performed some of those services on the contract, which caused us to record that unearned revenue in the first place, and we reduced it by debiting that unearned revenue account. So let's go to our adjustments. Let's find that guy in here, and he is right here. We debited unearned revenue by $1,400 in our entry. So let's bring that $1,400 debit over to our T accounts. List that it was being recorded on March 31st when we were making our adjustments, and figure out what our new balance of unearned revenue is. Again, it is a credit balance account, just like salaries and wages payable, for example, so I can copy and paste that formula into the cell where I want to find our balance. The balance of that account is $2,800. Does that make sense to us at this time? Well, if we go back over here, we realized that we were recognizing at a rate of $700 a month. This contract was initially for 6 months, but we performed 2, which means we have 4 months worth of work left to do. And if we have 4 months worth of work left to do, which is valued at $700 per month, 4 times 700 is $2,800. So that number totally makes sense in that T account. We owe that person, Bernard Buss, $2,800 worth of work still for labor that they paid for in advance. How about service revenue? Well, we used this account twice. We have 2 contracts. While one has advance payment and the other one has deferred payment, if you will, we get to recognize the revenue not when the cash changes hands, but when we actually did the work. So on 3/31, in one of these adjustments, I know we credited service revenue. And we can start with this guy for $1,400. So let's bring that $1,400 credit over. But we also recognize revenue on our other contract, which I believe was to Rainforest Incorporated. And that guy is down here. We recognize $2,500, if I can get this to scroll, worth of revenues earned on that contract. So let's bring that number over. And this account has a credit balance, just like all other revenue accounts. So let's paste that formula. And we see that during the period, we will have recorded $16,000 after adjustments of total revenues. Our adjusted balance of our service revenue T account is up to $16,000. We've got insurance expense, supplies expense, depreciation expense, interest expense, salaries and wages expense, and bad debt expense. We use every single one of these accounts once during our adjustments. So let's go and bring those numbers over. This is equal to the amount that we debited insurance expense for. I think that was the very first adjustment, if I recall correctly. Yep. And that was $1,200. For supplies expense on 3/31, we debited that account for the amount of supplies that we expended during the period. I can go find that, and that was $2,900. We'll bring that $2,900 debit over to our T. For depreciation expense on 3/31, we recorded, scrolling down here, $300 with the depreciation on our cleaning equipment. We debited depreciation expense for $300. Let's transfer that over to the T. For interest expense, we recognize interest which is accrued on our loan in the period, which it actually accrued. Our interest expense account got debited for $100 right here. Let's transfer that $100 debit to interest expense from the journal entry over to our T's. For salaries and wages expense, we recorded the expense for salaries for which our employees had worked but had not yet been paid, which was $660. It was a debit. Let's bring that debit on over. And for bad debt expense on 3/31, we debited that account in the very last adjustment for $70 to increase our allowance from its current balance to its target balance. So let's bring that $70 debit over. Now we got to find the balance of all of these T accounts that we have down here. We can do this all in one lump sum. Expense accounts, just like asset accounts, have a debit balance. So the formula that we use for prepaid insurance is going to work for those expense accounts. If I right click and I hit copy, I'm getting ready to copy that formula. If I go down here and I find every single cell that I want to copy that formula to, starting with this one, and I hold down Control while I'm clicking on all the different places, it's going to highlight all of them at once. And now, when I right click in any one of them and I hit the formula paste bar, it copies that formula over and we have the balance of all of our accounts.